Test.
Hello?
Testing.
Hello?
No? Testing. Oh, you can
It's a
hear
little
us?
quiet. Can you hear us?
Oh.
How about in the back?
You can hear us. We can't hear that you can hear us, which is quite discerning.
Low? Is that better?
Do we need to project?
Like your mom told you.
From the diaphragm.
From the
Speak
diaphragm.
from the diaphragm. Not from the diaphragm. I just got in trouble. Okay, I think we can start. I'm looking for the thumbs up from the back.
I got the thumbs up already.
Perfect.
Oh, plus he said it, so we're good.
Plus he said, so we're good. So look, as long as you're not doing that, I know we're okay. And I'm looking for hooks, and I see no hooks. So we're going to move forward. So we'll make the introductions brief, if you don't, yeah. This is War Stories from a quarter century in payments, and I think that's really cool that it only says a quarter century. So I've been in payments a tad longer than that, and I feel no need to tell you how much longer, but always on the risk, fraud, compliance side of things. You'll learn a little bit more about that as we talk to you about how technology has really helped that. And I am co-CEO and co-founder of Infinicept, and my co-founder is...
Todd Ablowitz. I actually don't quite have a quarter century, but I will 1 week from today. And I've been always in payments. I'm a lifer. And I started in sales and did product and marketing and other things. So all the stuff that makes problems for Deana.
Right, so he's on the side of the house that we grumble under our breath about. But that's really not true because we partnered up, again, you'll hear about this in 2011, because having both sides really helped the company move forward, and it really helps us know payments. And as we go through this, we'll be able to answer any questions you have about payments, no matter what side of the house it's on, because we've got experts from both sides.
Can't promise we'll answer them right, but we will answer them.
Oh, that's a... Oh, yeah, I didn't realize that was a requirement. So we're going to start in 1988. Kind of helps you figure out when I started in payments. And I will not tell you that I was in banking prior to 1988, because I'm sure that couldn't have happened. What was going on in 1988? I think the most important things here are Big is a movie that holds up today. It's still fun to watch, especially since we're all watching so much all the time. And I still get rickrolled. I'm not sure how that can happen. But what's more important about 1988 is how the technology was solving some problems in payments. So anybody that was in payments in the 80s might remember these machines right here called imprinters or Kachunka machines, named after the sound they made when you used them. When somebody was running a transaction, whether it be at a retail location, or whether it be at a bar or a restaurant, and I'll tell you why that's important in a minute, all that would happen is the clerk or the bartender would flip through a book and see if that card number, 16 digits, was one of the digits in this very small book, which is probably why I can't read today, because I was in retail prior to banking, flipping through that book, and you'd write the page number down. Okay, that card has not been reported lost or stolen, I'm good. But wait, it's above the floor limit. What's a floor limit? Well, what that means is if the transaction was above a certain amount, basically whatever amount that establishment was willing to lose, or the floor, I think that Visa and MasterCard set $50 back in the mid-'80s, you could go higher, but then you might lose if that card declined. So you would call in. Everything was good. Then, at the end of the night, you would turn in your tickets to the night shift or the accounting crew, and they would separate out, and they would have these pieces of paper that they would then take to the bank the next day, and the bank would acquire them. Now you know why it's called the acquiring industry. The bank would acquire them, but the merchant wouldn't get any money, maybe sometimes not for a week. This could cause a cash flow problem. It could cause a problem because maybe they wouldn't pay out tips to their waiters and waitresses because they didn't get the money, so how could they pay out tips? Restaurants run on very small margins, always have. So the problem that was presented was time in the line, possible losses, errors all the time, having to call up for authorizations for things above that floor limit. You can only imagine how horrible that was if you weren't around back then, how horrible that was either for the clerk or how horrible it was for the person standing in line, the consumer, tapping their foot with their hands on their hips. How did we solve that in payments? Electronic payments entered our world. These are some of the first machines. Envoy created the FTP series, and we have the Xon Junior XLs from Verifone. The FTP series is funny, and unfortunately this picture doesn't quite do it justice, but that is an FTP3, which could handle tips. And back in the late 80s, I was helping restaurants by installing, picture a bar back, maybe you haven't been in a bar, I've been in one or two, small, and you were taking that huge printer, and you were taking that huge FTP3 terminal, trying to find room in a bar back for that so they could enter, but we found room, and now authorizations were immediate. You didn't have to flip through a book. You didn't have to get on a phone call. You just punched it in, and at the end of the night, you would then be able to enter the tip that really was given, and you could pay out your waiters and waitresses at the end of the night for their tips. And knowing how they live off of those, this is a really important feature. Now, the only funny thing I'll tell you about this is as I was trying to do all of these installations, I worked for a small bank in West Hollywood, and we had a lot of restaurants. Wolfgang Puck was really coming up, and I was lucky enough to get to install these in many of his restaurants. But back in those days, I didn't get to wear jeans. I didn't wear my lovely flat shoes that were comfortable. I was always in suits with skirts and heels, climbing around bar backs, trying to install these terminals. But it worked, because despite the fact the footprint was big, it was technology solving a huge problem in the very beginnings of the electronic age of payment processing. So it was really fun to be out there selling terminals and installing terminals and making sure they worked and solving a problem with technology.
You'll see that these vignettes will talk about, if you get into payment code, you'll see these things live in the payment code today. There's 70 bytes in a mag stripe, and we all ultimately, when you talk about acceptance of electronic payment, everything gets stuffed into that 70 bytes. And even when they added chip cards, they sort of add a few data elements on top of it. So I started in '96, and let's see, I like the Yankees. We see some, I guess, positive headlines for Clinton. And obviously it was a big deal, the royal divorce. So our marketing team wanted us to wear like 9 Inch Nails t-shirts or like, it would have been on trend, but we just didn't feel like we could pull it off. So, all right, let's go into payments. So when I started my first day in payments, my boss sat me down. I was just an outside sales rep selling small merchants. My boss sat me down and walked through what we were supposed to do, which he didn't understand any better than really I was able to. And the bottom line was, when you get someone to say yes, you have to have them fill out an agreement. And that was 300 questions, a voided check, a drop of blood, firstborn child. It was crazy, and a lot of the questions were duplicative, but at the end of the day, you had to know an incredible amount. And one of the hardest things to get a merchant to do, and this is true today, is to give you a social security number. They didn't want to give you the US market, but around the world it's a tax ID or a national ID number. They don't want to give you a social security number. And so as I started selling merchants and learning about what was going on, the biggest problem that I saw that needed to be solved was the merchant application. And I spent about 4 years later, I was running product at Wells Fargo Merchant Services, and I said, I'm going to fix it. I'm going to get this right. And I spent with my team of people an entire year. I think it was 6 people on the project for a year, talking to every department of First Data, because Wells Fargo then and still works with First Data, now Fiserv, and what do you do with those questions? KYC was not invented. That term didn't exist, but they were terrified of their shadow and were worried about losses. And ultimately, KYC is a proxy for what is going to be a loss if there's a fraud or any of the things Deana spends her time on. And so long before any of the modern age, my team and I spent a year. We talked to every department. And we were highlighting fields. I guess you wouldn't call them fields when it was, 3 pages or 4 pages in triplicate, press hard, 3 copies. And as we were going through that, we would highlight a field and say, okay, what are all the departments that use this? How do they use it? What do they do with it? And we spent a whole year doing that. And after a year, what I can tell you is we got that application down to 150 questions, a voided check, a drop of blood, and a firstborn child. And so after a year, if you work in a corporation like that, and I'm probably unemployable now, but back then I tried to color only moderately outside the lines, and you have to do your job. So after a year, we gave up and said, this is the best we can do, 150 questions, voided check, a drop of blood, and a firstborn child. So I'm going to hand it back to Deana to move into 2006.
Yeah, we're going to go to 2006, but before I talk about 2006, I also want to say I was part of his problem in 1996. While I didn't work at First Data, I did work at a bank, and I was the one saying, well, holy mother of pearl, if I don't get that voided check and a picture, thank you very much, and if I don't get that driver's license, how on God's green earth will I ever know that this merchant is real? No, 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 we must have all of these things, Todd, or we will never know. I wasn't quite right. And the good news is, throughout my career, I've been able to learn. And that was when I was working at a bank running a program. And I went from there to an ISO, an independent sales organization, and cleaned up what was a pretty high-risk program. From there, what I did is I then went to what was called an aggregator in those days, but we were all online. We did everything online. So in 2004, when I started Rich Consulting, I had an idea of how to streamline all of the sudden. I got it. I got what it was like to work on the internet. So then when we enter 2006, and I am now out on my own, and I'm helping others, really the one big thing I want you to know about 2006 is Paul McCartney was 64. So I thought that was quite interesting. I didn't know that. He wrote that song, When I'm 64, when he was 14. Also, I didn't realize that. But here we are, 2006. Paul McCartney is 64. And what's happening in payments? Well, the internet is not just for porn anymore. This is kind of a good thing. We have consumers on the internet. We have eBay. We have Google now entering this with Google Checkout saying, oh my gosh, I'm the biggest search engine. I really can provide a ton of value. I am going to create Google Checkout, but I have no idea how to do this and to not take a ton of losses. So I started consulting with Google and started working with them on how to do something that today I'm very proficient at. I was just learning how to do progressive underwriting, how to get just what you need to identify the person. We didn't call it KYC. I'm sure the bankers did or somebody did, but we just wanted to identify the person in the business, just based on the risk we were facing. So what we did is, rather than getting a voided check, pressing hard because you were making 3 copies, what we were able to do is take technology and say there are many non-documentary ways to do things. That's what we're going to do now. So we started doing that lighter underwriting so that you would only need heavier underwriting when the merchant so warranted or the volume so warranted for risk. We also talked about keeping the bad guys out. I worked with some people who are still in the industry. One of them is at SIF Science, which is an online security firm. And that was one of our charges also, was how do we know when the fraud is hitting without having to look at green bar paper that you would have to kind of fold up, which is what we did back in my first slide. So this is how we used technology in 2006 to begin what you see today in the frictionless world. This was one of the beginnings of it.
So I love this one. I won't reference all of them, but 2011 was another good year. You know what was happening as Deana was, and I knew nothing about this at the time you were working on that. I was doing contactless payments in Silicon Valley, but 10 years before anyone needed it, by the way. But what was happening was Jack Dorsey was messing things up, and he went out there and he scratched that itch I had, which I still have to this day, which is how do we get the merchant application to be frictionless? And how do you make this thing that, you know, Wade describes it as underwriting like a loan? That's what they were doing. The 300 questions, they were treating it like it was a loan, for crying out loud. They were just accepting credit cards. And what Jack did is he said, screw all that. I don't care what the rules say. I'm going to go ask 15 questions and get an approval within a minute. And that's what Square did. And the only problem was that they were breaking the rules. And JP Morgan shut them down. And most people don't realize this. Or what's the Twitter saying? Few understand. But Square was shut down. Every single merchant on Square was turned off in 2009, early 2010. And I saw Jack speak in the summer of 2010, and he said, look, we got JP Morgan to agree to turn us back on. And we're going to be huge. And I believed him. And then what happened in 2011, and the reason we talk about 2011 is Visa and MasterCard changed the rules to allow some things, and it doesn't matter the details, but they allowed some things that Square and Stripe were doing. And Stripe was founded right around that time. They were in stealth, called Develop Payments, I think just before then. And I called Deana, and I said, you know, I think this thing's pretty big. I've been dreaming about it for a long time. Someone figured it out. But if they change the rules, which they subsequently did, this is going to be a big market opportunity because the world needs a lot more like Square, and Square's not going to be the only ones. And so we talked and we said, well, you know, let's play around with it. We'll do some gig work. And sure enough, this company, Develop Payments, called and said, can you help us get approved at Wells Fargo to be this new thing called a payment facilitator? And they later changed their name to Stripe, and that turned into our first customer. And so they were pushing Deana in all sorts of ways on how can we do it more frictionless. And they were learning the rules from us and how to work within the rules and do it properly, but also be frictionless. And then we were learning from them in the sense of they were very innovative, and you know the rest of the story, worth probably more than $100 billion now. And so they were doing that. And as the rules got changed, it became clear, by the time we did our fifth engagement with Shopify, it was clear to us that this was more than just an idea or gig work, or it was a business. And so up there is the whiteboard that we did at one of our customers. We went and whiteboarded all the stuff that the Squares and Stripes had to build on top of the merchant acquiring or processing infrastructure. And it was things, really boring shit, like how do you do KYC? Sorry if anyone's a KYC provider in here, but how do you do KYC? We didn't even have the term KYB. I don't think we had KYC even then.
KYC is about now, and we in our little world started with KYB because it works so well. Mm-hmm.
And so we started figuring out how do you do all the operations. There's about 6 different things you have to do if you want to follow the rules and onboard a merchant. And that's why there were 300 questions, because, yeah. That was the client was POS Portal. Yeah, and they had a CRM for ISOs, and we were talking about collaborating and building this on top of their CRM, and it just turned out that the architecture was better to be API first and to build it on, we built it on Azure. But you see, light application, underwriting, boarding, and then you get the boarding information, you got to provision a gateway, and you got to provision these different things. And then the right-hand side was the merchant management. That's what I was about to get to. Once you've got a merchant ID or a sub-merchant ID, then you have to do stuff. Like we didn't want to build anything related to transactions or gateway, because there were 1,000 of them. Literally, they have benchmarking reports of payment gateways against each other. And so our vision was to build something that was completely independent of a payment gateway and that would work with any processor and solve this complexity. It took Square and Stripe years to build the stuff. There's people in this room with PayFacs that know what it takes to build this layer. But the problem is, they get locked into a processor or into a gateway, and all the tools end up sort of flowing down from the processor. The processors haven't largely invested in this back office stuff since the 90s. So as a PayFac, you want to build your own layer, you want to build your own experience, you want it to be, these days it's probably a little more than 15 questions because the government got involved and said you have to do beneficial ownership, and you don't need me to explain that to you today. But we set out to build this layer that was independent of all the transactions, not part of the transactions, but would solve all of these complexities because it took, even the greats, took them years to build the stuff they needed to serve these we call them sub-merchants, but it's the same thing as a merchant. And so our idea was to use what was quite new. I mean, I think we were on the first version of .NET Core, and I think we were actually on .NET Framework before that, where we were trying to use this sort of coming into its own cloud technology and API technology to solve the needs of a very broad spectrum of burgeoning payments companies and keep them from having to build all this stuff themselves. So, yeah, I don't know if I missed anything. I didn't ever get over the failure to make the merchant application simpler, and some of the folks in the room, who I can see some developers here, know that I start to have like nervous tics, like if I see something in the merchant application or in the KYC process that still can be improved. So that's what started. We started a company. Actually, it turned out to be more than a consulting gig, and it turned out to be more than just a product. It turned it into a whole company. So.
And before I move on to 2015, I will tell you that one of the things that made us able to reduce the application even more and to make it frictionless and to do all the non-documentary approvals is companies were popping up around us that do the KYC and do the KYB, Know Your Business, that didn't exist in 2000 or definitely in the 90s. So we could do so much, and companies like Dun & Bradstreet were venturing off. LexisNexis were really expanding. SIF Science that I mentioned a minute ago wasn't around for quite until late 2000s, maybe, 2010s, maybe early 2010s. But that's one of the things. And then you combine innovation and vision with understanding of the rules and what has to be done and where the real risk sits. And what this allows you to do is take knowledge, turn it into technology that other companies can use. That's how the technology really helps payments, is because it's not just, hey, we've got some great coders, and trust me, we have the top. One of them's here, pretty excited about that. We have top notch in our company. But we also have great ideas and an understanding of the rules that we face in payments. Though the presentation, for those of you who were here for the one right before, you learned a lot about that, and a little bit about fraud as well. I came in on the end of it. And really understanding that is what helps technology move payments forward and continue to move it forward. So 2015, I don't have any fun ones here. In fact, I didn't like this one. There's always a music one, and our marketing people really did want us to have like a layer of t-shirts so that as we went to each year, we would go to the next year's t-shirt. You can imagine that didn't sit well with me. I happen to be wearing pearls, which means I probably wouldn't stand up here and continue to take off different t-shirts, but I loved the idea nonetheless, and I love seeing what was happening in the world at each event. But 2015, Todd and I were moving Infinicept along from a technological standpoint, and we were consulting all over the world. We were working with MasterCard, and we were helping them bring under and unbanked into the payment system through teaching payment facilitation, which is the aggregator thing that we spoke about earlier, and PF's the rule change that made us partner in the first place in 2011. What we found as we were doing this is there was a snag for payment facilitators. So every payment facilitator has to check every submerchant. And as an aside, every bank, every ISO, every merchant that enters the system must be checked against this system called MATCH, the Member Alert to Control High-Risk Merchants. Not sure where the M goes in the word match. However, there it is. It's magic. So everybody has to check. And match is a list controlled by MasterCard that has merchants on it that have been closed for cause. Maybe they were breached, maybe they had a lot of fraud, maybe they had identity theft, maybe they stole something, maybe they did a lot of things against the rules. So they go onto a list, and you're allowed to process for them. Of course, they can be a merchant, but MasterCard wants you to know that these guys have caused problems in the past so that you might drop that frictionless and give them a little more friction to enter the system. So they do require that you check the system, but payment facilitators couldn't have access to that system. How are they going to do it? It meant that they had to go to their bank, and the bank, most of the banks specifically outside of the US, would enter the name, tax ID, addresses, and send it one by one up to MasterCard to get the results. This could take a long time, specifically with the high volume online payment facilitator. And some of the ones we were working with in India were signing up hundreds and hundreds of sub-merchants a day. So there's no way the banks could keep up. So this would stop their boarding of new merchants in its tracks. So when we would do our presenting outside of the US, Todd would open the 4-day sessions or 2-day sessions with discussing the market, what you should be doing, how it's driven, how you can make money. And then I'd come up and tell you what you needed to know and how you would do it, and all of the barriers I could think of, I'd put up in front of you, ways to get around the barriers, ways to do frictionless underwriting, ways to really make it work until you get to match. Somebody would raise their hand, I would call on them, they would ask me how do they get access to match. I would have to say, you can't. So let's just pretend you didn't ask that and talk about other things. But it really was important. And as Todd would listen to this, and he sat in the back of the room and he'd listen, poor Todd had to listen to this many times. What that meant, though, is hearing the problem over and over starts to make you think of a solution for a problem that's not being solved. So we sat there, Todd came up with this idea, what if we grab that information, we put the bank's information with it, and we send it off to MasterCard, and we get the information back, which, by the way, is confusing information if you've never looked at it. And we parse it out because we have that knowledge, right? Again, we're taking the knowledge of something. We have that knowledge, and we serve it up to the payment facilitator with oversight ability for the banks. Nobody had ever done this before. MasterCard's terribly unfriendly when it comes to outside vendors doing things, but they had a problem they wanted to solve. Their CEO said, I want you, my team and MasterCard, to ensure we get how many?
100 million merchants by 2020.
100 million merchants by 2020. And up to that point, they had 5 million? I don't know, 20 million. It was 5. They needed to get 5 times that in 5 years, when it took them 30 years to get to 5 million. So this wasn't going to work if we couldn't speed this up. So that enabled MasterCard to work with us. So what we were then able to do, and by the way, my consulting company was Rich Consulting. Todd's consulting company was Double Diamond. And we started working, and this is the deckware. This is an actual, it's just like our whiteboard. This is in the presentation to MasterCard to get this approved and how it would work. So once again, we saw the problem. The PFs couldn't access match, and without being able to access match, they couldn't sign up merchants the way they wanted to with the speed they wanted, and those merchants would just go out to people that would flout the rules, and of course there's always people that will. So we took our knowledge, we took technology, and we solved another problem.
I think this one's yours too.
Oh, well, only in the beginning. So here we are in 2020. I really hate that Tiger King's up there. Ugh, he's not my favorite. Anyway, here we are in 2020, COVID. Holy mother of pearl, that's the second time I've had to say it in this presentation, because this is a big deal. The world is now different. It's different than anything we could have known, anything we could have thought of. I'll tell you a funny story. As we were looking at insurance and putting together things for Infinicept, and we were looking, we had to have a disaster recovery, and it was a pandemic. What are you going to do in case there's a pandemic? Ha, 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 we laughed. That's the silliest thing we've ever heard. There's not going to be a pandemic. Well, sorry about that. We jinxed us. And there was. Luckily, we had good disaster recovery, because one of the things that we were able to do was everybody could go work at home without a problem. But that's just to tout how wonderful we are. Really, what I'm here to tell you is, it is that need of everybody having to be at home that spurred on more payments innovation. Once again, a problem was presented to the payments world, because commerce isn't going to stop. It's presented to the payments world, and the payments world has to figure out how to solve it. So, boom, contactless took off. That hockey stick curve finally happened. Contactless was out there. You'd see people tape over things in retail. You'd see, oh, no, it doesn't work. Give me your card. I'll swipe it. But now the few retail things that are open, nobody wants to touch anybody, because we don't know in the very beginning that it's airborne. We think if we touch you, I'm going to get it. So now I don't want to touch you. I don't want to touch something you touched because I'm going to get COVID. So all of a sudden, everybody's okay with the contactless, and now we have to improve it, and improvements have come. Apple Pay, right? Everyone's using that more than they ever did before. One of the other things, though, is now the internet is even more important for getting your goods, even your groceries that you used to go to the grocery store for. So what does that mean? Fraud's on the rise. Anytime something goes quickly forward, the bad guys are going to run right there and say, okay, how can I take advantage of you? Because you've got a really big need and you're going to be focused on something else. So I'm going to take that little sliver and I'm going to go in. And one of the worst things that started to happen, worst in my book, was the fraudsters saw this huge thing for COVID cures, for vaccines. Before the vaccine had existed, they were out there saying it did. They were selling counterfeit PPE. They were selling counterfeit gloves that wouldn't work, that wouldn't be good. And anything you can think of to protect yourself, now the bad guys are out there selling on the internet. So one of the things you could do with technology is you could refactor some of the things you were doing. That made it sound really good. But what you could do is add keywords in to your underwriting portals, right? Because we're doing all this underwriting when we're bringing in merchants. And you can add keywords in and make sure that if that merchant has something, COVID, vaccine, cure, gloves, that it kicks out for a closer look. This may sound like it's not that big of a deal, but with technology doing that and pushing those pieces of information out to a human for further review, we actually, in processing, in our world, we're able to protect people. Because by not letting bad PPE equipment go out, we're protecting the hospital workers. By not letting bad ventilators be sold, we're protecting the patients. So we in the payments industry were able to help. There are many other ways we do, but then they go off our theme of years and what's changing, so I'll stay here for now. But with all of this, with the online shopping just hitting its all-time high, the bad guys were really happy, but the payments industry was able to step up through technology, not only help with underwriting, but also in the risk monitoring piece as well.
Okay, so where's it going? Today, there are something like 1,500 payment facilitators worldwide. Every region has a good staple of payment facilitators. And a lot of them, unlike Square or Stripe, a lot of them are vertical. So you may have read about Toast is about to go public. Shopify does more than half of their revenue from electronic payments today, about 9 years after they launched Shopify payments. Toast, I think, is something over 90% and Toast is a restaurant point of sale. And we, at Infinicept, we have around 50 customers, and that's the verticals include doctors' offices and event management and nonprofits and B2B. And I mean, we're very horizontal, but what you see happening is Stripe, once again leading the way, Square, once again leading the way, have gone beyond payment acceptance. That's been their beachhead. And where they've gone is to add issuing and banking as a service, and instant payouts was a long time ago. Lending was a long time ago. I think Stripe just bought a tax company. Square just bought buy now, pay later company. So what does that mean for all these software platforms that are the tip of the spear for their vertical market? They very often start with payments, and then they start adding, by payments I mean accepting Visa, MasterCard, American Express, in the US, Discover, maybe e-checks. And where does that go? What we see happening, and I think the theme of this conference, is those software platforms that address businesses are going to use payments as their beachhead and then add additional products. So we see an ecosystem of fintech products being sold to businesses through software companies that handle all things in their vertical market. We don't think that Stripe will be the only PayFac offering a platform like that. We think there'll be many of them, and our hope is to work in this ecosystem with the players to help bring new financial services. We're not going to build financial services. We're a system of record, and we hope to bring financial services of all kinds. We don't do credit card processing, but we make it possible for PayFacs to white label a credit card processing function and use some operations tools to make it happen. So we hope to see a lot more of this and a lot more fun technical problems to solve. So with that, any questions? I think we've got just a couple minutes before we wrap up, hopefully on time.
Where do you see RTP or other instant payment rails or capabilities impact?
New payment types, in my experience, have always gone to solve unsolved problems. So I would expect to see RTP, FedNow. We've already seen push-to-card solving problems that are relatively new. I would say that you'll see those in our realm of PayFacs and software platforms. The first thing will be settlement. So once the transaction happens, whichever way it happens, the money going to the merchant very quickly and cheaply. But I think you'll find a lot of unsolved problems get solved. In terms of, do I think people will toss their Visa debit card and start, putting in a bank account number to get real-time payments? That's not my view. I think they already have some P2P offerings. Those will probably get better. But I think you'll see things that are not solved get solved with RTP. Deana.
Is there an opportunity for banks to become PayFacs?
We signed up a bank a month or two ago that wanted to be just used the PayFac model. Capital One was a PayFac before they sold their PayFac to Verifone. We see banks large and small doing this. We also see banks use our platform to oversee PayFacs under them. And then we see something that we call, it's really a crappy name, sorry to the world for this name, but we call it PayFac Lite. And that's where the bank does all the heavy lifting operationally, and the software platform gets the branding and the customer service and the sales. And so that PayFac Lite model it's being powered, really, Stripe doesn't call it this, but that's what Stripe's doing. And Adyen does it, and you see some of the bigger processors do it. We think banks will do it too. So the question was, when we started up, it seemed like getting PayFacs launched was the friction point and the hard problem we wanted to solve. And the question was, do we see other problems in the Visa and MasterCard ecosystem where there are problems needing to be solved? And I would say card present. I think in card present, there's an ecosystem in card present that has to do with like encryption keys on EMV devices. There's a lot of lock-in, a lot of vendor lock-in on that from the gateways, processors, sometimes the equipment manufacturers. And if platforms are going to expand, we're not going to go solve this problem, it's just too much for us, but someone needs to solve vendor lock-in and card present and estate management, which is it's all this wonky stuff about how you deal with encryption keys and know where all your terminals are. I think that's ripe for disintermediation. That's if I wasn't doing this, I think that's where I'd go. Disputes. there's a lot of innovation happening there. Most times they do it on gain share. Do you want to talk about charge?
Well, yeah, what I was going to say, that disputes is a major friction point, and it's that all wrapped around the security, and so you lose that RTP ability because of wanting to take a look at what's happening prior to paying out. So to find a way for the disputes to stop them, we're going to have to get more biometrics in there, which is another big problem that's been trying to be solved for years and keeps missing the mark, but it's going to get there, and it's going to help it. Visa and MasterCard are trying to assist with some of the problems with disputes. They're not doing a good job because they're concentrating on the issuer side, not on the merchant side, where we need more concentration and more tools. So to figure those tools out is a great opportunity. And
when you solve it, one of the biggest problems is you're screwing someone. Are you screwing the merchant or are you screwing the consumer? Or the issuer. Or the issuer. And so it's a tough, multi-sided problem to solve. So like if someone came up with a technology that kept track of everything that was happening in a decentralized way, and sorry, I couldn't help myself. So my view is the world is full of bundle, unbundle, bundle, unbundle, bundle, unbundle. And so you'll see both directions in different segments, in different geographies. You'll see for example, some players are big enough, like Stripe or Square, where they can close the loop. The card brands would call it off us, on us. You'll see some of that. But it all goes back to what's the use case you're solving for? How big of a solve is it? How much money is it worth? Mm-hmm. And I don't think you're going to see one monolithic answer to any of this. I think you're going to see it's a terribly differentiated and terribly segmented market. And I say terribly, but I mean it's a positive thing, right? The needs of consumers in the burgeoning economy of Nigeria are vastly different when you've got really deep phone payment infrastructure for the unbanked. It just couldn't be more different of a market that's just entering e-commerce or just has been entering e-commerce versus Canada and heavy like almost 100% debit coverage and super cheap and very little cash and no checks.
If I could add on to that just a little, I think the biggest point you made was Nigeria's problem being different than the US's problem. Once I started working more internationally, it really brought home that what I saw as a problem, it isn't a problem everywhere, and my solution for the US isn't going to work in other places. That is one of the bigger issues. But second to that is, if you solve the problem, and you see all of this information and both sides, as you're talking about, and you start to act on it, you add liability to yourself for the places you miss. And what I see is people or entities or companies, especially large companies, so afraid to say, well, I saw this, but what am I missing? I saw this and I stopped it, and then they get sued because they didn't see something over here and somebody got hurt. We see this with human trafficking a lot. We saw this with a bank in Australia who had information on both sides of the transaction, but they didn't pay attention to it. And if they had paid closer attention to some of these transactions going to the Philippines, specifically to a part of the Philippines known for human trafficking, they would have been able to pick up on the problem. But it's not where money is made. So it's not where everybody will spend their time. So that people have to have a specific passion to want to solve that problem and be okay with the risk that comes with solving those types of problems. That's a little bit of my soapbox, so thank you.
Any other questions? Well, I think we went a little bit over, but we started a little bit since the last presenter went a little over. So appreciate it. Deana and I are, I don't know if we have our.
It is not on.
Yeah, we're on LinkedIn and I'm on Twitter, so. Payments Expert, at Payments Expert. So love to talk to you guys and appreciate you spending some time with us.
Thank you all.